Okay guys, and welcome to the channel. My name's Jonathan, and today we're going to be discussing what's happened with GameStop. We're going to be looking at the short squeeze that happened and the kind of two parties that were involved in that short squeeze. And then I'm going to actually have a look at GameStop and see if it's a worthwhile investment. But yes, let's get into it. So the two main parties that were involved were essentially WallStreetBets, which is the Reddit for crazy investments, where people essentially put in these crazy kind of day trades or trades, and some people make a lot of money and some people lose a lot of money. And then you have kind of the conventional Wall Street people. And the main person involved in this was a guy called Andrew Leff. And he was planning on shorting GameStop. People short a stock. Now they have a particular length of time of how long their contract is. And based on the start and end of the contract, they either pocket the difference or they have to pay the difference. So they borrow shares, they sell those shares instantly, but they have to buy back those shares based on whatever the price is at that particular time or the end of the contract. And then they give them back to who they originally borrowed them from. And then they get the difference. So that's how short works. Now a short squeeze is when another party pushes the price of the stock up, and the people who are shorting essentially have two choices. They can either buy back early or they can wait out and hope that the price goes down so that they don't have to pay the difference later on. And in this situation, then quite a lot of people bought out. And when they bought out, they bought the shares at the current price, and there was a higher volume of people buying the shares, so the stock price goes up. So you have this kind of never-ending cycle of people pushing the stock price up and then short sellers having to buy back those shares because they are squeezed into a position where if they don't buy back the shares, then the price could go up even higher and they'll have to pay back even more to who they originally borrowed the shares from. So if that was confusing for you, I do apologize, but essentially what happens is that the price just keeps getting pushed up because you have a party pushing the price up, which in this case is the people on WallStreetBets. And then you have a party essentially trying to short and being pushed into a corner where they either buy back the shares quickly or they have the risk of losing a lot more money. And if they try to not buy back those shares, they might potentially make their money back, but they could also lose quite a lot. It's quite funny to watch, it's quite interesting to watch, and it kind of lets you get an idea of how emotional the market is and how crazy things can be. But actually having a look at GameStop as a company, now that is something that is a bit more difficult. And if you're looking to get into GameStop with all this kind of hype, just be very wary that the likelihood is that it's not going to go too well. Because, I mean, sure, this could happen again and other people could short it, but that's not really investing, that's gambling. And I'm not a gambler. But that is quite a significant increase because the 52-week range you can see here was $2.57 and it went all the way up to the highest today was 160 almost. Yeah, that would have been quite a nice increase. So if you are not familiar with GameStop, just know that it is in a dying trade, and I will break down why it's dying. One is that it is a physical store that you have to go into to buy the product, which has quite a few problems with it. One, they have massive overheads because they have to deal with rent, they have to deal with employees, and they have to deal with essentially physical products. Now, there's one extra to that is kind of circumstantial, which is the corona pandemic, where people actually can't go into their stores to buy the games, and people are just going to buy it online. Even before the pandemic, people were buying online more. And the good thing about games is they are typically like that size, that height, and about that thick, which means they can go through a letterbox. So going into an actual store for games is kind of not really a good position to be in, especially when you're competing with companies like Amazon. Secondly, you have a big shift in how games are actually played. Now, with things like Epic Games and Steam, people are more likely to download games rather than actually go in, buy the game, take the game home, get the disc out, put it into their console. When all they have to do is just download the game, wait a little bit of time, and then they can play the game. This is good for gamers because gamers are inherently very lazy people. I should know. I was one. I still kind of am one, but not in that extent. But yeah, and then there's the other aspect of it where if you look at businesses and development businesses and game businesses, it works out a lot better for them because they don't actually have to produce all of these discs to sell them, which saves them a massive cost, where they can just have one source file that people can download from, that they can update very easily if they need to make any changes or many fixes. And they don't really need to deal with refunds the same way, which is a completely different topic itself. But GameStop isn't really in a good position when it comes to all of these things. GameStop is dying and it's not really changing with the times. It's kind of stuck. It's stuck with a massive amount of liabilities because it's got all of these upkeep and all of these costs. So it can't afford to adapt the way that it needs to. And yeah, I mean, it is quite interesting what's happening with the kind of short squeeze that's happening. But if you are looking at this as a long-term investment, then yeah, I wouldn't really recommend it. I'm not saying that you shouldn't, but yeah, it's not really a goal for me. But please do enjoy the short squeeze. Now, if we actually go back and actually have a look, yeah, it's been quite an interesting day to say the least for GameStop. But yeah, guys, I hope you have enjoyed this video. It's just kind of see what happens when you have kind of conventional common sense investing or strategy against, well, the public. And I would also recommend that if you're going to short anything, be very, very careful on kind of, well, what you're shorting. But thank you very much for watching. I hope you have enjoyed this video. If you did enjoy the video, if you wouldn't mind giving it a like, I would really appreciate it. And if you do like the content, then I will see you next time.